I'm Al Verma, team leader of the Verma Private Wealth Group at CG Wealth Management. Our team has 75 years of combined experience and specializes in retirement income strategies. You should also know that at Verma Private Wealth, our investment philosophy is focused around identifying investment themes driven by secular tailwinds that enhance return and reduce risk for clients. We certainly feel global utilities fit that description in the current market environment. Today, I'm very pleased to have Mike Dragisits, portfolio manager at Harvest ETFs, join me to go more into why utilities belong in your retirement portfolio. Thank you so much for being here today, Mike. There's a lot of buzz about utilities and how it's going to impact a whole bunch of things. It's topical because of interest rates, data centers, and I'll let you take it from here.
Great. Thanks, Al. Thanks for having me. I'm happy to be here and happy to talk about utilities.
Excellent. To help us get started, Mike, I made a short list of questions. Are you ready?
I'm ready.
You're ready. Excellent. Question one, why are utilities considered a reliable income source for retirement portfolios?
So I think when we think about utilities, we really have to understand what it is that we're looking at. And so that would be your power generation assets, your electric distribution assets, your electric transmission lines, energy pipelines, and it does encompass even areas beyond that, like in the telecom infrastructure space. And so these are all daily necessities, things that we, need every single day. So their business model is steady through a business cycle, through the ups and downs. And so what that does is it generates a lot of stable, consistent cash flow. And that's because a lot of these businesses are regulated revenues and regulated business models. And so when we think about utilities, it really makes them an ideal source of steady income and an important area for retirees that are looking for security in their portfolios.
Makes sense. You can't turn the lights off. You need to have them on. Okay. So there's, I don't know whether we're going into a recession or not, soft landing, no landing, but if we do go into a downturn, how do utilities generally perform in a market downturn?
Yeah, and I think just before I talk about the market downturn, we've also studied the situation of what happens in a rate cycle and what happens specifically to utilities, and we've put it into sort of a simple framework as we've looked back to the 70s through all the different rate cycles. And in the first stage of that framework, rates are rising. So that's generally sort of a negative period it has been for utilities. But then as rates peak out, and we've kind of identified that period as fall of last year, and that's sort of been the environment that we've been in, where rates have been peaking and we're in this transition period, that has generally been a very positive environment for utilities. And then it kind of splits off from there. Either we get a soft landing scenario and rates are declining and the economy continues to grow, and that's been generally a positive environment for utilities. But as you mentioned, where utilities really shine is in that other stage, the other fork of the road, which is the hard landing. The economy slows too much, we get that market downturn, and that has been the higher probability event after a rate hike cycle. And the outperformance of utilities really shines through, and that's because of that defensive characteristic of utilities. The more resilient business model, the steady income, steady cash flow, and the regulated business model really shines through. As you mentioned, we still, even if economy moves up or down, we're still going to need that electricity. We need to turn the lights on. We'll need that gas and water on a daily basis. And so those business models are less volatile and help utilities weather market downturns.
Yeah, that's great. I really like the slide because, it's hard to say where we are, and it's good to know that, they're going to outperform at more than one scenario. Personally, I think we hit peak rates, and, because we have hit peak rates, I think we are in stage 2. So that bodes well for utility sector returns, in my view. All right. My next question. What are the current market dynamics making utilities a strong investment right now?
Yeah, I think there's two aspects to it. I mean, we have the market perspective. We've entered into or started off the rate cutting cycle finally after months of anticipation. The Federal Reserve cut overnight interest rates by 50 basis points in September, and expectations for additional rate cuts to come. Now, some of this has already been priced in by the long-term bond market, so 10 years, 20-year bonds, 30-year bonds. Those yields have already been moving down quite substantially, and in that falling yield environment, as we discussed, it's quite positive for utilities. These are highly leveraged businesses, and so their costs are impacted positively by falling yields as well as from a valuation perspective. And so I think from a market perspective, the falling yield environment is pretty positive. From a fundamental perspective as well, you do have the story about increased power demand expectations, which is really setting us up for a secular tailwind in the utility space. And we just have to look at things like the rise of technological advancements and the stories about AI and increased power demand from data centers. And that's, a really good fundamental tailwind for the utility space.
Yeah.
So
Yeah, on that, I just think it's very timely that you're with us this afternoon. I think Amazon yesterday announced another 500 million nuclear deal where they actually need to, get a, modular small nuclear plant just to power one like data center or their like data center cluster. But this is going to go on for a while. I kind of think in terms of the demand that Gen AI is driving, like we're not in the fifth inning, like we're only in like the first inning. So you're going to get this secular tailwind for a while, like really driven by Gen AI. Would you agree?
yeah, absolutely. I think we're still very early in this process, and this is a process that's going to take, decades to unfold. Decarbonization of assets, not only companies in the tech space, but it's, in the utility side as well. We have to make that transition to renewables. So we'll continue to see that secular tailwind, producing capital expenditures and growth. And so what it sets us up for in the utility space is not only you have that stable dividend model, stable cash flow model, but you also have sort of long-term growth potential.
Right.
And that really, provides a good hedge for any type of market uncertainty in the coming years.
Makes sense. Now I get to ask your favorite question. Why should investors consider Harvest UTF or Harvest ETF HUTL for their like utility exposure? Full disclosure, I do own it on like behalf of my clients, and my investment philosophy, it likes to be right on asset allocation, which drives 91% of returns, and even the best stock pickers get 30 to 40% of their like picks wrong. So at Verma Private Wealth Group, we're definitely big believers in asset allocation and have broad-based exposure to a sector. And that's why we buy HUTL. But obviously, you know a lot more about that ETF, and we'd love to get more details.
Yeah, I think just very high level. As you said, you're getting diversified exposure to the utility space, and again, that's geographic exposure as well as subsector exposure as mentioned. And so, what you end up owning is 30 of the largest names, high quality names throughout North America, throughout Europe, in the utility space, in the telecom space, and the energy pipeline space. And again, the focus is on the highest sustainable dividend payers in those areas. And then we top it off with the active covered call strategy overlay on top of that to generate additional monthly cash flows. And so, essentially what you're getting is exposure to the utility sector, with a very strong focus on high monthly cash flows. And I think that's just really just an easy way for investors to gain access to that market without the need for individual stock selection, as you mentioned. And it really makes it an ideal solution for retirement portfolios, especially those focused in on income. As it relates to the performance of the fund, you can find all the information for HUTL, updated all the time on our website. What I point to just from some of these numbers here is the 1-year number, as we talked about, looking back to kind of the fall of 2023, where yields and rates peaked out. We've had quite a strong run there, about over 16% annualized performance, and so that's pretty impressive for utilities. And again, for our fund HUTL, we have to look at it from a total return perspective. We are generating covered call cash distributions, and so not only are you looking at the net asset value, the market price of the underlying holding, but you have to factor in the monthly distributions to think about it from a total return perspective. And what that means is, looking back to 2019, if we took a standardized $10,000 investment into HUTL on it from a total return perspective, the net asset value plus the distributions, you'd end up with just north of 13,000 as of August 31st in terms of your growth of the $10,000. With that, I'd kind of turn it back to you, Al, to wrap up.
Yeah, that was like great, Mike. I think we covered all the main points why people want to own utilities and why HUTL is such a great one-stop ticker in your portfolio. Maybe with other stocks like a TransAlta or a power utility company or pipeline, but it's good to have that broad diversification. So I think I can end here with just thanking everyone who came out and listened to our webinar today. Also want to remind people that their investment journey doesn't need to end here. The slide, you have our team and our contact information. Please feel free to reach out and let us help you review your wealth plan and build your worry-free retirement income portfolio, which will definitely have utilities in it. So I look forward to hearing from anyone who wants to speak to me in that regard. I wish everyone a wonderful rest of the day, and you and I will be in touch, Mike, for sure. Thank you so much for your help today.
Great. Thank you for your time.
Okay. Bye for now.